right, let's get busy. Here comes my screen. Well, as I promised this, let's wait a few. I'm a little early. Let me wait till we actually get to the start time. We're definitely having fun though. FOMC is not disappointing. I caught a great fade, and I have done a couple little trades since then. I'm gonna do some fairly aggressive live trading here, I think. Yeah, it isn't over yet. Remember, the bottom of the hour, the press conference just started, so um, it could get even wilder based on who says what, you know. So yeah, stay really nimble, and we're going to talk about the right way to be reading this, which seems unreadable. And from a structural point of view or a price levels point of view, it's unreadable. But if you look at it just statistically, it's actually kind of tradable, and that's going to be kind of our theme today. So I'll give it another couple of minutes to see if anyone drifts in. Only about half the group is here so far. I'm going to post a reminder. Okay. Whoops. Okay, that will do it. Okay, there's a couple more folks. All right, come on in. Let's get started. FOMC did not disappoint. And what I want to focus on today is I want to focus on how wave volume tools are really useful in kind of calling your attention to where to play, and then how on the DOM you can kind of see how it's being played out and what your risk management is. So that's kind of the theme, or at least the intention. So first, let's start with ES, and I'm going to get rid of my always on tops here for a minute. All right, let's first look at this from a range point of view. So this is just 30-second linear regression, my normal settings. And we were pretty much, as we talked about this morning, just kind of drifting along on a tight range pretty much all day. That's what was going on. We had a few probes up and down at different times, but nothing really significant. And I could even bring this in a little tighter, and you can see, way earlier, we were a little up in this area, but ever since about 9-10 o'clock my time, it was pretty rangy. Anyway, so then of course we got the announcement, and the market kind of took off, and it did set up a really nice short that look at this, came back to literally the place that the range was before the announcement. I mean, and it does this all the time. This is the first point that is really important, but you never know. All right, here's the key thing. This is really common on news reactions, that it gets back to roughly the same spot, and obviously it will overshoot the edge of the range, which is what this part down here is, because, that's where one of the ranges ends, right? And going the other way, we overshot the high a lot. We got all the way up here. And so you never know where it's going to end. But once it starts ending, that's the key in these things. So, and that's why the wave volume is so important. So let's get rid of this, and then zoom in a little bit. I think I have to go back to my pointer to do that. And yeah, okay. So again, up here, you could have got in there, but there was a lot of volume still going both ways. Remember, these are 1 minute bars. So that was going back and forth there for about 2 minutes on a pretty big range. So what really would have been important is what's going on right up here. And, that would be really hard to see. Let's try going to 15 seconds. And so it's back here on 15 seconds. So, all right, on that time frame, you could almost see a sweet spot right there. But again, without knowing how much volume this represents and how much volume this represents, it would have been kind of hard to play that. And so let me put it back to the other settings. And then let's look at this from a slightly different perspective. Okay. What if we do the same thing, only we look at the volume? And I've got these on 15 seconds now, just to, again, kind of be able to see where things changed. And, here's the announcement right here where we took off from. Big, strong volume up. We got 227 ticks higher on 31K of contracts. But look at what happened. We did get a wick there, and we got a wick here now. This turned red because the volume was on the downside there. That's what's coloring these bars. And this blue line that's real dark and this red line that's real dark, it's thicker. That is a tool in Jigsaw that there's similar tools for any platform. This just happens to be the one here. But again, don't worry about the platform, worry about the idea. You can implement it on any decent platform. What it does is it says, okay, that's the amount of movement we got. So what the line is doing is it's considering the direction weighted by the volume. That's what it is. It's dynamic. It's not based on any fixed parameters. This is a little swing tool that's built into Jigsaw. There's a lot of tools like this out there. I've got one on my old Ninja platform. It's called Price Action Swing. There's a lot of ways to do this. But the point is, even if you didn't have that line there, you could see that we came up on 31K of volume, okay? But this bar and this bar and this bar were really aggressive back the other way. So at that point, the volume shifted right here. That's why you see that little did. Now, this thin line is just a super trend. And again, those exist in any platform. And it's just an indicator that's a very fast moving average that it works like a trailing stop also. It can't cross over. So if direction changes, the color of that will change. And that's what happened right in here when this one bar came down lower than that bar. That made a directional change because we didn't take out the high. So that's why that went red. So this is a very interesting combination of tools. And remember, my use of tools is to tell me when whatever I think I'm seeing is not what's really happening. And this one, obviously the momentum was really strong to the upside, but then it put in a beautiful high volume reversal. And if you're going to trade high volume reversals, you have to get a really good sense of where a slowdown or a stop in the volume is significant enough to play. Now, in this particular instance, my first short entry was here. And why was that? Because we got a wick and then we got one of these spinning top things. And at that point, it had stopped going up. But I was also prepared at that point, and that was about 40, 57.40. I was prepared to do this well up to 50 or 60 because I knew we'd get, it's just the way it reacts when we get to an extreme right when the announcement comes out. It will run stops and squeeze and squeeze and squeeze until it just can't go any farther. And again, this summarizes it well. If you're watching on the dome, you can really see the percolating, and I'm going to talk about that more, but I just want to tell you what these tools are saying. So when the direction changed, the thin line, goes red or blue. That's what that is. That's just a super trend. The thicker line is a trend also. It's just a very fast trend indicator, but it's weighting by the volume. And so this is important because once we got this high volume reversal up there, it was a really good short trade, but you had to do it really fast because look at the absorption that we got. Let me go up to that spot. And you'll see how fun it got. So here's the high right there. And the volume was very aggressive on both sides. It traded really actively. This wasn't just a, total absorption on the ask. But look what happened. It did get to a point, and if you looked at this on a footprint, you would see the same thing. It got to a point where there was exhaustion, and we did leave unfinished business up there, by the way, but clearly the volume tapered off really fast. This is from a vertical monitor, so it's a little hard to see in there. But again, this is the point of this class. If you learn to read on a footprint, you'll see what you should be seeing. But learning how to read footprints is time consuming, and you got to really be focused on the numbers. And some people find that hard to do, including me. So I like to look at some sort of summary of it, which is what the wave volume does so well. And then what you want to do is once it's showing you the inflection point, then when this is going on, you really want to be paying attention on the dome. And so that's what was going on up here. I was watching that. And once that happened, we ran out of gas and we started to come back down. And that was up here. You can see, again, there was wicks up there and it was clear we were going down. So it was a matter of how aggressively to scale it and get more and more short on the way down, and then when to start taking profits. And that's where, again, the dome is much more useful because you can see, look at these little deltas here. These are blue. These are the ask sides. And there's a couple places where there was absorption on the way up. That's what that was. And but we traded a whole lot above it. And so there were kind of passive traders all over the place. But if you look at the high volume nodes, the very top, here was another one right here, around 47.5, the quarter number up to about 50. See, there was a big absorption and then it went above that. But when it came down below that spot, that was right there. And that's where everybody just said, okay, now we can short it. And that was all this volume that we saw back in here. It tried to bounce and everybody said, nah, this is still a short. And down we went. So again, it's not the individual price level, it's the behavior of it. And once you were into that short, this would have been the first spot to start taking profits when we start getting wicks going both ways. But then it broke down again, and then it did that again, ebb and flow, and then it broke down again. And then lo and behold, we're right back where we started. And that's always the first spot to be looking for reversals. So this was pretty easy, to stay with. But even if you only got half of it, I posted the trade that I did off of that. And I didn't even get half of it. I got about a third of it because I was way early and I didn't scale fast enough because my mouse charger, the mouse I was using went dead and I had to switch mice, which only took like 5 seconds, but it moved like 10 points in those 5 seconds. So always keep your mice charged. Anyway, so now what's happening? Again, that was the big story. 31K up, 105K down. It didn't even measure a zigzag on the way down because it stayed dominantly red, and that was the point. And again, if you switch time frames, it'll look a little different, but 15 seconds to 30 seconds will pretty much tell you the same story. And you can go faster than that, but you'll see a lot more noise. And if you go slower than that, you won't see this kind of pausing and then reassertion. And remember, what this tool is about is who is in this very instant in control of the tape, who is running the market. And remember, this is in the pit. We show you guys this all the time, but all of these things tie together in my process. Direction. This is about the direction and the energy of the direction. Which way are we going? Right fracking now. Well, we were going up, but once we got here, that stopped. You could even say it stopped here, because this was basically a short squeeze if you were watching the footprints or the dome, and then it reversed instantly. And that this was, remember, these are 15-second bars, so all of this happened in 1 minute. And if you were watching it, you could see it happening. And so direction right now, this is really good at gaming that. And then, what's the momentum and how is it changing? So that's what you're looking at. And it was pretty obvious that the momentum was pause, reassert, pause, reassert. It wasn't reverse until down here where it paused and it didn't reassert. It paused and it reversed. We had a clean reverse right there. That's why the price tool, see, that's measuring the price disregarding the volume, and the price reversed right here. But the volume didn't catch up with it till up here. That's why it turned blue. And now we're going back and forth blue-red, which basically we are in ebb and flow. And look at the volume. That was down on 100, up on 47, then it pulled back on 5, and it made a higher high. That's right there. There's no longer a statistical or measurable downtrend. And if you measure just the price, it was right there, price and volume right there. So it gives you really good clues about where to trade and who's in charge. This was the shorts were in charge. This was a short squeeze on the news. This was people taking profits most likely off of that big volume down. And then we went into ebb and flow. And right now there's no dominant energy. It's trying to go down again. So it might be kind of fun to see how it does. So let's watch it. And by the way, we're just right back at the open of the day. That tells you how, all of this movement, nothing has changed all day. That's why trading the price levels themselves can be very hard because you just don't know how far away it's going to get. It generally comes back to price levels and VWAPs. We're right on the VWAP right now. It's it right there. That blue dot, that blue bar would be the VWAP if I have it stretched out. And again, that's regular trading hours. The one for RTH is always going to be a little bit one way or the other. Let's look at that real fast and see where it is. So, okay, so yeah, we're pretty much right on it. Also, we're a little bit below it on using Globex. This is just RTH right here at 875. So that's what's going on, and that's what the tools are telling us. So let's see if we can do some trading with it. Now, are there sweeps? Well, look over here at NQ right now. NQ just swept 10 points in both directions in a matter of seconds. It's because the press conference is going. And so that's price discovery. You cannot trade that. But again, could we trade that the way I was trading that earlier if we get way to one of the extremes again? Well, that's the idea. Exactly. Let's see if we get toward an extreme. And if we do, let's be prepared to play. But right now, as I was just saying, we're on value again. So here, if you try to trade anywhere around here, you're just going to get caught in that popcorn machine going both ways. You're not going to have a good edge here because we're on value. I mean, literally, we're right on the open in both contracts. So one of the things I am going to do, though, I'm going to reset the volume so we only get fresh volume here. And I'm going to do the same thing. I'm not going to do that with the deltas, though. So what I just did was reset all the volumes. But the delta for the whole session so far is this one on the left here. So when we get back up to the top, if we do, we'll see those big deltas I was showing you earlier. That was the first one. That was the second one. That was really the beginning of the high there. And then we finally got the high up here where we got a big giant block of them kind of bolted together right there. And those added up are not quite as big as the couple it ran over, but it's significant enough to make a bulge there. So again, it is pushing up a bit. Let's see what happens. Remember, the pattern is always, well, first of all, they make the announcement, and then the press conference started at the bottom of the hour, and that'll go for a while. And then we'll be actually trading into the close until the bell rings in the equities. And then the futures go into settlement and it'll still be even crazier. The pattern typically is that there's some sort of reaction to the announcement. And if you looked at this reaction right now, just what's happened in the range since they announced it, what would you guys say the reaction is? If you just had to give it, is it a positive reaction or a negative reaction? And put what you think in the chat. I'm curious. So this right here, this is where we started. We went up here, and then this is where we are now. Would you call it? Yeah, I see a positive reaction. Of course, it's a positive reaction. So again, that's not particularly important. What's important in the pattern of FOMC is that a positive reaction today is the announcement. Tomorrow will be the reaction to the reaction. And generally, that's the other way, particularly if there's a big move. So if like we close up like 100 points, well, right now RTY is up 1.5%. Let's say everything closes up 2% today. There's a really good chance a ton of that will reverse tomorrow. That's very typical. And then wherever it ends up on Friday, on the third day, is typically what people consider to be value. But Friday, of course, is quad witching, which could shake that up again. I mentioned this in the beginning of this session at the beginning. So yeah, this is a positive reaction. And generally the reaction, if it's positive, will close positively. And so if you were looking to do anything here, a trade long here back to the UB at the high isn't a horrible idea. In fact, the time to have done it was right when we got back to the open there a minute ago while I was talking about it, because now the volume is to the plus side. And that's why, remember we were in ebb and flow a minute ago? Well, we're still in ebb and flow, but we tested the bottom of the range and the volume on the upside is stronger. So if we can get anywhere up in here and make a higher high, so the first one to watch would be 25, then the next one would be 30, the quarter numbers, maybe 27.5, but probably give that 5 points. And then if it takes this one out right here, then we totally have reversed the move down. And so that would be above about 40. And you don't want to use exact numbers because that kind of move will never be exact. That's why I use regression on my LRC plots, because regression is the statistical science of what's the best fit. It does not mean high or low. That range is not the high or the low. It overshoots it all the time. But statistically, it's the best fit. And isn't that what thinking in bets is all about? Remember, I showed you that slide on the first day of Monday. You have to learn to think in bets. It's like, you're playing blackjack or poker. You got a pair of aces in the hole. All right, perfect. But there's some things that can flop that can make that not the best hand on the table. In the meantime, you got to bet it like you got it. That trading is like that. You have to look at the statistics and play it. And then what experience does is experience tells you how to react when the statistics get tweaked a little bit. Like when you're fading a high and there's a stops run, my automatic reaction to that is to buy it. And that's not the normal reaction. That normally stops everybody out, which is exactly why I've just made it my reaction to buy it. And it almost always works, but I don't know, it's not something you can teach because it happens too fast. You have to just react. And it's not just necessarily the high, it's the high with a stops run, which is what I was just showing you guys. The extreme was when we were back here. That was a high with a stops run. And how would you know that? Well, you need a footprint to really see it. You could see it on the dome when it happened. What I can do is bring one of my footprints over from the other side. Hang on. In Q5, where's ES5, right? 30 ES, right? I can't see that small. Well, it's not that one, so it must be I must not have it labeled correctly. Oh, there it is at the top. Okay. So this is a 1 minute footprint, and it's scaled the other way to be vertical. So I'm going to just see if I stretch it out a little bit, if I can show you what I'm talking about. When we were up there, you would be able to see it was a stops run. You can barely see it because I have to crunch it so much, but you get a bunch of zeros up here, and that's what stops runs look like on very, very fast footprints. You get zero prints at that point. Anyway, let me put this back because we're kind of going up again, and I want to be able to kind of show you how to use the tools as we go into the close, and the stuff going on from the FOMC press conference is going to kind of wind down. So let me put this back. And then we'll do that. Okay, now I can get back over here. All right, so we're right smack dab in the middle of the range with a little bit of a lean up. That's why these bars are colored the way they are, that kind of cyan. And again, that's just a super trend indicator. That particular one is built into Sierra chart, and that's the settings. I always use the Hall moving averages, which are the fastest moving averages, and that colors the bars. But I don't trade off that. It just kind of just so my attention is in the right place. This one, you could literally trade off of what this is saying in the Jigsaw one because of that weighted by the volume behavior. Again, that was a really good long when the price turned. And now the volume, remember I said if we took out this high, well, we took that one out. This one's up next. And this is a nice little long setup here. And it kind of called your attention to it right on these wicks because that's when the price line changed from red to the blue. And again, it's just a fast moving average. I think it's a hull in this one as well. This is just the one built into Jigsaw swing charts and the super trend. And you can see it's real simple settings. And I don't know a platform that doesn't have some version of that you can implement. You don't need to have Jigsaw or Sierra. I know it exists in Ninja. My Ninja has it in it. I've shared those templates in the pit. I haven't changed them, so the ones shared in the pit are still the current ones for Ninja and Sierra. And in the class stream, I posted my Jigsaw ones yesterday. Okay, so let's let the top of the hour clear. So we will get the last 30-minute rotation. We're well up above the overnight high again, and that's important. We're holding up there. Let me show it to you with the TPO. It'll be easier to see. And so, yeah, here's the ESTPO. So here's where we are. Value area is shaded. The blue lines are the initial balance. So we're well above the initial balance. We're challenging the double distribution of yesterday. Overnight was very quiet. Remember, that was the really tight range from this morning. And so there's an old single print we took out that was all the way up here at 60. And there's some more single prints up in the 70s and a poor high up at 80. So, if we get going, we could easily go get that even today. So don't just automatically fade moves up. There's a lot of arguments to join them, particularly on Fridays. Wednesday going into quad witch is going to be a little harder to read. The volume is better. We're at 1.8, 1.1 rather, almost 1.2 million contracts, and we still have an hour to go before settlement starts. So that's not bad. But again, there's still some volume in the September contract at this point. Now there was just a big sweep down. Did you see that right there? We just swept down. And remember, one of the criteria on my sheet is about sweeps. When there's sweeps in both directions, that's not friendly. That's hard to trade. And at the moment, we're getting them. See, there's another big sweep down. So, but we can see where the buyers and sellers are now. Remember, I reset the volume. Here's where it's getting sold, right around 30, the 30 quarter number between 27 and a half and 30. It's trading into the ask, and it's holding right below that big absorption from earlier right there. But and this one's getting big too down here. But we've splurted around in here. We've traded back down now. So, again, it's the very short-term momentum you're trading off of, because it can change really fast. I still would play this as a long, not a short, but you could have easily faded into that spot right there. So let's watch this. I think this will be really educational. And by the way, that's a really good example of chart to dome right there. I was just showing you the big picture over here that we made a higher high and the volume picked up and we had a weak pullback. So this is a long. And then here's what that looks like on the dome. Here's the absorption you're seeing right now. Here's the absorption of the whole session. We're still battling between these two spots where clearly there's some passive sellers. Otherwise, there's no way you get 5,000 contracts traded on the ask at a certain price. That's clearly a passive that wants to sell there. Or it's, some other time frame, somebody's hedging an equities portfolio or whatever. But that's a big number to be in one spot like that. And so when you see, one of those, and then, look at all the liquidity now is above there. There's some liquidity right there. That's why it's gray, see? So again, just to review some tools, my Jigsaw, this over here is a liquidity heat map. So the whiter it is where more liquidity is. These little circles are high volume nodes, and then whether it's trading on the market on the buy side or the sell side is what the coloring is. So when it's green, it's market orders on the buy side. When it's red, it's market orders on the sell side. And that can also help you identify inflection points very clearly, because you'll see it'll trade up into liquidity like it just did up here. And then it'll flip over and start heading down. And the order book will also flip over. And there should be a flip chart on here, and I don't see it. Something is wrong. The flip chart got turned off for some reason. Now it's back on. I don't know why that happened. Anyway, this little thing down here summarizes what the pulling and stacking in the order book is. I talked about that on the first day. See where it's highlighted? That's the current change of the order book, and it happens really fast. And then the numbers just to the inside of the shaded, the yellow shaded, that's actually the order book. So this is the order book and how it's changing right on the inside bid and ask. And then the flip chart down here is summarizing 5 levels of change, and that's telling you if it's a bullish or a bearish bias there, and that's what the blue or the red is. Let me spread this out. I don't like having the volume there, so let's get rid of the volume. Put the volume below it. That makes it easier to read. So I'm just switching the order of those. So the bottom one's the volume, and then see how this is flipping back and forth? That's the order book flipping from pulling and stacking as people on the bid pull their bids, or as people on the ask add to their asks. That it's the net of that over 5 levels. And then if you want to watch it at any one level, that's the highlighted column here. All of those, see -1, 0, -1, 2. And, minuses are the books going down, and positive numbers are the books going up. So you can see the nature of the auction. Obviously, right now, it's pretty frenetic. And the reason is, look at the liquidity. It's really thin. 20, 30, that's tiny liquidity. That's a fraction of what's normal, 25% of normal. So, and it's all because of, the FOMC stuff and the press conference and everything else. So once we get past all that nonsense, the last hour should be very interesting, and it starts in about 50 seconds here. So if anybody has questions, please put them in the chat. I hope you guys are getting this and it's making sense. If it isn't, please let me know. But this is really important stuff. I mean, if you can learn to read a day like this, you can do it anytime. And remember, the morning was really, really quiet because everyone's waiting on this, and now we're getting all this volatility because it's so thin. So if you watch the inflection points, this could be an interesting spot to play long right here. Let's try that. Let's get some domes up. It's going fast, but I was way late. I missed that by like 5 points, and I'm still profitable. It took me that long to get my dome open or my trading window open. At least I'll have it up now. I'll get it up and I'll keep it up here so we can trade. Whoa, big sweeps down. There's another long opportunity right there. Let me get this. My platform's lagging just a bit, but by the way, don't do what I do. I'm trying to teach a technique and a way to read the market. And if you're just trying to mimic me, you'll always be a day late and a dollar short because it happens too fast. But you can learn how to do it. It's like right now I've got five micros, and I'm going to try to scale this a bit, particularly above 0. But I'm going to try to sell a little bit on the way up too. That's how I manage risk. I scale in and out around inflection points like we have right here. The volume's pushing down pretty aggressively right now. See that all red? So I might be early, but we're at the edge of the range. That's important. So I'm kind of putting those 2 and 2 together and playing a light long position. There we go. Now we're profitable. We took 5 off. Let's take 5 more off right there as well. Or let's put 5 more on further down. Either one of those is fine with me right now. And again, now we've got 15. I'm trying to scale it up to maybe 50. So I've got plenty of room to play with. Always take profits and try to protect between your entry and the current price. But this style, when it's this volatile, that can often be tricky to do. And if that's the case, then you should go to micros and be prepared to scale in and out around the volatility, because there's no other, or don't trade it. There's no other way to manage that when it's this volatile. Okay, we just swept down. There's a nice wick down there. Let's see if this responds fast enough to me. Just the trade back to 0 here is a really nice, profitable little trade. Let's have a look at that volume while we're doing this. So that was 37K. No, the last push down was 45K. So it's still a decent idea if this low holds to play a long snapback. So I want to get on the other side of that liquidity provider though. And see that big chunk right there of liquidity? I want him to be above me. So I want to get out of some of this position because he doesn't really want to trade. He's just putting up liquidity. And see, he moves away from the price. So that's when I want to start taking profits, when he's doing that. See, this is really good dome trading technique. You could do this on Sierra. You could do it on any good dome platform. Ninja, yeah, not so much. I would pay for Jigsaw and use the Ninja feed if that's what you're on. But you can do it. Their dome's just not nearly as precise. Anyway, scale out of some more of this. All right, nice little trade going right here. It's been in heavy profit. It's also been a little bit offsides, and it's a little slow to scale properly because of the lag. There we go. Now it's catching up with me. So these should come off. I should get 10 more off here, but it's lagging a bit. Okay, I got them off. Now I want to get underneath it. And for the last 10, and we'll either catch a runner or we'll make $300 on that little move. Okay, there's 375. Let's protect that tighter. It's bouncing too much. Boom. Okay, so that was 375 on that. And look at what happened down there. See, that's what you're looking for to happen. The price flipped over. I could see that happening, but it was just, I was at the mercy of the volume until I got on the other side of my entry. And then I could just protect it and ride it up. But there's an art to doing that. We're at the bottom of the range, but we overshot it again, and we're coming down pretty hard. So I wouldn't just keep buying this. You got to have an idea where you want to play, and that one was predictable because of where it came down to before. See, right here and right here, and again, we're right back to where we were before all this nonsense started at 11 o'clock, and that's my point of this entire class. That doesn't mean you'll be able to manage that, but those are places where you certainly should pay attention, and generally it will tell you, hey, this is an inflection point. I think it's screaming that to me. I mean, look at all the trading on the bid. Those are buyers. It doesn't do that when it's getting sold. But the question is how far up and down it'll go at any given moment, particularly when it's this sweepy. Nobody knows, and so you have to be that's where the risk management is so critical, and that's why you have to be prepared to play with small amounts of micros. And if you're wrong, all right, it costs you 50 or $100. If you get it right, it's a quick 3, 4, 5, 600, whatever. Here's a perfect example of that. Look, this is the whole day. Worst trade minus 126 and minus 90, best trade plus 312, and a bunch of other good three digits for $1,100 before commissions. That's as good as it gets. You will make mistakes. Learn when you're wrong, where that is. Learn to be really good at being wrong. And being wrong, sometimes, a newer person will make the mistake of just trying to save money all the time, and you can't do that because there's too many professionals here. They will constantly take money from you. Ooh, this is interesting. Let's watch this low, and then I'll continue this topic. I'm very inclined to buy this low, but where? Let's start by buying it. There's a 5 lot. Okay, it's working. Let's get another 5. Now we have 1 mini. Okay, it's still working. Let's see how far it pushes down. Let's get on the liquidity for the next push down and see if that trades or not. If it does, it tells me something. If it doesn't, it tells me something. Once we get far enough away from our entry, we protect it. And boom, we just took a $50 profit, and we still have $50 of profit we're working with here on the last 5. I protect it when I don't want to lose it. So we get above $100, that's right here. I protect that. I don't want to give $100 back. And yeah, sometimes you leave some on the table doing that, but you don't have big losers, and you take money out of every trade. Okay, see there, I'll protect it right there, and I'll get filled because it could push down again, in which case I'll get a better entry anyway. So watch that liquidity provider. Oh, I might hit the market again. This is getting bought pretty aggressively. And you can do what I'm doing here. I exited profitably, and I'm going back in on the next push down. Again, that's exactly what you should be doing if you're looking for a long down here. I don't want that to stop there. Okay. So what do we got? We got 15. Let's take 5 more. That's 2 minis. And so again, I always want to get some profit off quickly. And then often, when you get the big rips, you can just ride them. That's what you want to be able to do. So let's try to do that here if we get a rip going up. The tick's pretty negative. Look at this, minus 800. That's the equities. We're pushing the low end of the range pretty hard here. So don't get too ambitious. For most people, 2 micros is plenty, not 20. So again, scale is important. Okay, I'm going to get taken out profitably right here on the first chunk. And so now I have 10 left. Let's protect them again. There's another $100 locked in. Let's protect that $100 again. And boom. All right, so we just made another $300. I'll take it. Let's see if it pushes down again. Wash, rinse, repeat. That's why when you're a child, it says that on the shampoo bottle. It's to teach you to do this. Oh, I'm going to scale this one. It's starting to, the tick is still negative, but it's improving a little bit. Advanced decline, not doing anything. So that's just volatility. Probably off something being said at the press conference, or some analyst saying something about something that was said at the press conference, some nonsense like that. All right, now we've got a nice protectable 10 micros again with $300 in profit. Let's protect that $300. And now this could be our $1,000 trade here. Could be even more than that. Let's keep a tight protection on it. All right, I took 500. Now we're out with 300. Okay. Wash, rinse, repeat. Let's try it again. Again, there's good absorption right here where I keep doing that, but it could come all the way back in here, and I'm prepared to scale there because that's risk I'm willing to take. But I'm not just buying every dip. This isn't just adding to losers. It's actually the opposite. I'm buying an area, whether it's onsides or offsides, I'm buying that area based on what I'm seeing the trading into the liquidity. Gonna get long again here at the market. Why did I just do that? Because we stopped going down. Sometimes that's an entry. So I hit the market there just to see if that was actually going to hold. And so far it is. So, and there it goes again. So sometimes that's a good test. It's a good little drill for yourself. A pause in a strong direction is often the beginning of a reversal. Not always a reversal, but the beginning of one. We're coming down pretty hard here. Look at the direction's pretty down, but I'm able to find a nice inflection point to trade profitably off of here. It's really clear what's happening, and so why not do that? That's why direction, not trend, is what really matters. And we're getting both directions here. If you were measuring a trend here, it would be hard to argue that this isn't going down at the moment, but it's not going down hard enough that I don't want to trade it because of where it is. And remember, I explained that a minute ago. We're right back at the beginning of where this all nonsense started. When so again, that's that you got to play that spot because buy the rumor, sell the news, and has value really changed based on what the Fed said? No. It just people's appetite for risk temporarily is changing. That's what's happening. Okay, if you have questions or comments, put them in the chat. I will be with them as fast as I can. I'm just adjusting something on one of my other monitors here. My platform is very laggy at the moment, probably more from Zoom than anything else, but there's also a little bit of action, obviously, in the market. We just got long again, by the way. I don't know if you saw I had a limit order there. So I just got long 88, and we'll try to ride that one up if we can also. Again, I don't want to protect like 20 bucks here with it this volatile, but I'll protect 100 bucks. There we go. So, I'm trying to keep my stop under it, and we get hit. All right. Again, I'll do that all day. Why not? Why wouldn't I do that all day? I mean, of course. What's wrong with my positions window? It's not working. Okay, hang on. Oh, position, thirds, orders, and positions. Hang on, my platform is really annoying me here. Okay, that's what we want, and I don't want default. Where is my template? There it is. Okay, come on. Okay, geez, that's laggy. Well, that too. Yeah, about buying more shampoo. Yeah. I was joking, but I wasn't. Of course, that's marketing. It's why they also show you like they put like 2 inches of toothpaste on the toothbrush in the commercial, and you need like the size of a pea, and that's they do that with everything. The evil the corporate the capitalists. Yeah, excellent point. Too funny. All right, so let's see if we can't find some more trades here. Why am I not aggressively looking right now? Because, well, what happened? We definitely retraded the low, but now we're in this ebb and flow again. The last push down was 21K. This was 39K. The colors are going back and forth. See, it's red, it's blue, the volume's red, the volume's blue, because we're in ebb and flow. That's what ebb and flow looks like. So the next thing we want to do is look for a break out of this little apex down here. Again, the tick just got really positive. If we can get going to the upside, it's a really good long. I'm tempted to get long again here, and I'm just going to do it. But it probably was a good idea to do that lower down first. So I might have to scale into this. But in the meantime, it's already working. So let's protect some of it. I'm long from one here, and it just went to, whoa, just got to sweep up. Perfect. Let's protect that second half. Oh, beautiful. Okay. So again, we're long from 2, and it's trading at 10. And we'll put the stop under the quarter number at 7.5, 7. Next quarter number up's 10. Then we'll move the stop up. But I don't think it's going to go that far. Nope. I move my stops by quarter numbers. If it's allowing me to do that. But that, once it clears one quarter number and gets into the next one, it generally won't go all the way back to both of them right away. So it kind of gives you a little room to work with there. So by that, an example would be, one quarter number would be 5, and let's say I've got my stop down at 2 and I want it to get above 5, and then I'll put my stop between 2.5 and 5 somewhere, because 5 is the quarter number up from 2.5. And it might go back to 2.5, but once it gets far enough away from 5, like around 7.5, then I'll move up under 5 at maybe 4.25. And that's what I do. I try to just stay so there's a quarter number between me and the trading price, and my take profit stop. And that way, it's got to move 5-6 ticks at least to come back and get me. And it generally rotates 3 or 4 ticks at a time. And this is all just ES I'm talking about. Other instruments are different. Like we talk about the 50 level and the 00 level and NQ, that the quarter numbers are like that. That's just the behavior of the instrument. All right. Well, we are 15 minutes in here, and God, now it was really, the reaction was definitely positive. And as we were talking about, but now it's like, we're kind of struggling around back, right where we started. We've talked about this a few times. Here's where we started. We shot up, a retest. This is the retest we were just trading really aggressively, because that turned really hard back above this spot. That was what we were talking about just now. But now there's higher highs above us that we're not really threatening. We're kind of at the tight end of the LRCs. And so, if this is the place I'd start looking for it to go down again if it was going to. Or if I was going to get long, I'd want it to pull back from here, because this is the very top of the range, and we're back at the open, and we're back at the VWAP. Surprise, surprise, we're back at all these markers that it tends to go back to. Funny how that happens. It gets comical when you've been around long enough, and there's a few of you that are old enough. You might not have been trading long enough yet, but you'll probably get there sooner than some of the people that aren't a little older, where when you see, and if you're an older person, you understand what I'm about to say in anything, not just the market, but once you've seen something enough time, it just doesn't surprise you anymore. And again, if you're over 40, you know what I mean. And if you're over 60, you know more of what I mean. All right, in the market, it takes about 15 years or so of trading an instrument to start to see that stuff and really just see it clearly. If you really practice a lot, maybe 5 to 10 years, but no quicker than that. I don't care, whether you're a video game guy or anybody else, it just doesn't happen faster than that. But once you see the patterns, it just will crack you up that it's so consistent. When you're in that trade, trying to buy that down there where we just were, that overshoot of the area where we started, you really got to have conviction that you're right. And how do you do that? You think in bets. And the other half of how you do that is you've already accepted the amount of money you could lose if you're wrong. If this trade setup cost me $1,000 if I'm wrong, I wrote that $1,000 off before I took the trade. Otherwise, I can't do it. And so you got to be right enough that you don't just lose money. But when you're in a position like that, it's really clear where you're wrong. So just let the tool tell you if you're right or wrong, and don't overthink it. This is so important. David, I hope you're listening. I see you're here on your phone. This is so important. Yeah, the tool's telling me that it was a long starting right there based on the volume. And that's an instantaneous measurement, because this push down was not as much volume as the previous pop. So as soon as that volume got above it, it flipped over. And you can see the price turned right a little bit later than that. That's where the colored line, see, it turned once here, then it turned red again, then it finally got that little reversal signal. It had a fake one here, but this whole area you could have been buying. And again, that's the video game guy approach. When you get to an inflection point, get aggressive. Just make sure you've got a good one. And the best ones are the ones that overshoot the previous ones by just a little bit, and then get really aggressive. Like, look at all the wicks here. Wick, 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 boom, we went up. There, look at that big volume chunk, big volume chunk, big volume chunk, big. That was all the guys that were short, either taking profits or getting reversed out. And anyway, the guys that were short that take profits the fastest are the ones that start that. That's another thing to remember. Pause, rewind, listen to what I just said again. Traders that are the first ones taking profits, for example, if you're short into a move down like that, the people that take profits first are usually the ones that start the turns. So if you start seeing the volume changing like that, and I'm not talking about, by a couple of contracts, but significantly enough, like the absorption I've been showing you on my domes, where it's enough that it can color the area that's bigger than anywhere else right there, or at the other end of the range where we were just getting long. Let's look at that down here. And you can see this is almost all red. There's a couple little spots of blue, but it was really clear we were trading on the bid. Those are buyers. There's a couple of places the sellers jumped into, but that again, that can be profit taking. It could be other time frame. Look at this block right here. Anywhere down there was a good spot to get long, and then the very bottom was just perfect. These every single contract trading down here was trading on the bid, which means no matter how many contract sellers came up with, there was buyers saying, "Yeah, I'll take those," and that's how you get the wicks. And that's how you get a high volume reversal, like we saw. Whoops, this needs to reload. Come on. There we go. Like we saw right here. That's exactly how that pattern forms. So you can see it on the dome. You can see it on the chart. If you're looking at the right type of chart, you'll see it on a footprint chart. But if the time frame is too long on the footprint, like if half-hour rotations, you have to be looking within the time frame of your footprint, and if your footprints are too fast, then they'll just be too noisy. So that's why footprints, in my view as a scalper, are really good for catching 30-minute rotations and 5-minute rotations. But if you really want to get in and scalp the short-term volume and who's running the tape at any given moment, you really want to let the wave volume inflection points show you where to trade. Because occasionally you get these kinds of artifacts structurally, like I've been showing you, these big blocks on the ask that aren't going to affect your scalp. They just happen to be there. And if you're trading structurally, they're really important. But for the very, very short term, they're not. And that's the thing that's hard to balance sometimes. I know some traders have struggled with, balancing a structural view, a market profile view of the market versus pure price action. And that's why I don't do that. We're pushing down pretty hard. I trade price action and I look at structure as context for my price action. But there are times I will take price action trades that have they're totally contrary to the structure. And you've heard me do that in live sessions with Lee. Okay, this is really interesting. This is an area that got bought. Let's nibble into it. That was really big aggression. And see, this is Jeff's reaction. When there's big aggression, the market's overreacting. We're probably going to find a low down here somewhere. I've got 25 micros, 2.5 minis on at 91. Definitely will trade this all the way down to the low, which is in the 80s. No question. So I'm taking at least $1,000 of risk right now. But I know I will make money based on experience. Okay, we'll take some profit fast right there. Now we can protect it. We've got $400. We've got $500. Oh, we've got $800. Boring. We've got $1,000 if we get up to 3 here. There we go. Okay, let's put protective stops under everything. There's $1,200. Okay, I'm out of 5, so I have 15 left. Let's take 5 more off. Now I have 10 left. Let's see if it holds 0, 0 here. It's probably not, so let's take profits. Okay. So that was fun. So how are we doing? That was 807. The one before it was 207. Are there any questions about the technique that I'm showing you? It's a very specific question. I think this is fairly simple, isn't it? I mean, if you don't overthink it, it seems really simple to me. Am I missing something? Is there something that any of you, and again, feel free, if you're watching this, you're saying, yeah, that kind of makes sense, but this doesn't, this one thing I don't get, please tell me what those are, because to me, this is, I wouldn't call it a no-brainer, but it's pretty easy to follow this rhythm as long as you just don't have an opinion. My opinion doesn't matter. It's just whatever's happening now, and it's a very low stress way to play it as long as you don't trade more risk than you can afford in whatever size account you're in, because you just follow the signals you're seeing. Let the tools tell you what to do. Don't tell your tools what you think you're seeing. Let the tools tell you where the trades are. And right now, there's no trade here. We're smack dab in the middle of the middle. One of my favorite sayings, stay out of the middle. If it's the middle of the middle, you really want to stay out of it. So we're still working that 98 to 00 area that we just took profits in, and we're not going up anymore and we're not going down anymore. So we're in ebb and flow again. So it's back to temporary balance. So if we get another really aggressive push down, I'll certainly be interested in that. If we get a big move up, I might join it, but I'm a little skeptical of that. I don't know if I'm making more money today on the long or the short side. That's a really good question. I'm going to bring up Jigsaw Journalytics and ask it. I'll show you what that looks like. Give me a second. I'm also taking a drink of water. Let's see, Jigsaw Journalytics is right there. Let me log into it. Give me a second for your question. Okay, day overview. Account. A second. Okay, here we are. So, let's see what the stats on this. Sorry, I'll bring this over in a minute. I'm having trouble getting it to load with everything that's going on my computer, I guess. So let's see. Today is the 18th. So we just the 18th. Okay, we just want that day. Okay. Okay. All right, so I got my statistics up here. This is our day so far today. And so it looks like we're making a lot more money on the long side than the short side. That was the question I initially came here to answer. But we can see how long we're in the trade, less than a minute, 47%, less than 5 minutes. I was guessing a couple of them before I started scalping this. Anyway, you can put in all kinds of parameters, but this is pretty cool. You can analyze your results in a lot of different ways. It's built into, if you have Jigsaw, it's built in. It's called Journalytics. It's the web page that you're connected to. Anyway, let's see. What's it gonna do here? Let's close that. Okay, letting a trade go to the next trade. So yes, that is Journalytics, and I do use it. I don't use it all the time. I use it when I want to answer a question or test a trade setup. I'll tag that trade setup and then go back and run statistics on it. But I don't journal every day, every trade. That's tiresome when you get more experienced. But when you're young and new, that's not a bad idea. Although I have to tell you, I never really did it religiously, but I did it a lot when I was working on something like gaming a setup or something like that. So letting a trade go to take the next trade. Well, again, the criteria of any one trade has nothing to do with the criteria of the trade after it. So I might take profits off like you saw me do, and then it might go another 2 points and I come back in. And why didn't I just stay in? Because I got out. I mean, there's times when you do that. It's, there's no mechanical method to that. It's, when the market is showing you that it's gone to the point that you should be taking profits, or in my case, I'm protecting profits, it's very likely to come back and hit me when it's this volatile and take me out. And it's very likely to go farther. But the reason I'm protecting them is so I don't get stupid and overthink it. Again, it's just, that's how you do it. That's why I'm showing you the technique. There isn't always a reason or, a way to make it mechanical. It's just that's the right way to do it. If you're going to scalp, you have to protect profits. You can't look at the trade for mechanical rewards like, R to R of 3 to 1 or anything. You can use that as a guideline, but you can't trade that way. You can use a mechanical stop if you want, but if you put it in a really logical spot, it's likely to get hit. Whoa, big sweep down there. So again, at the end of the day, it's about managing your risk, and you find the ways that work for you to do that. But I do it by getting out of a trade if it's at the point where I would exit. And then often new information comes in a split second later. It says, oh, you should go back into that. That's still a good idea. And so I will. I won't say, well, I just got out, so I'm not going back in. That's what I mean. That's silly. If I keep seeing the same setup over and over again, I start getting suspicious if it starts working more than a couple of times in a row. I've told you guys this before. That's one of my quirks, but I find it to be very protective. Listen to this carefully. If I have a trade that has worked more than 3 or 4 times in a row, particularly an aggressive scalp at, buying the low or, fading a ledge, I will invariably not try it after that because, again, your brain just gets used to it working. And so your ability to measure when it's not gets compromised. At least that's what happens to me. And that's another thing. Video game guys like that too. He'll keep doing it over and over and over again. But the longer he's been doing something, the more suspicious he gets of the next one, even though the odds on the next one might be exactly the same. And that's just because markets don't tend to stay in one place a really long time. In the futures, when we're doing that, we're in ebb and flow and you scalp it. But if the range starts to change, you have to immediately be alert to that. And, we can poke to the top of a range and find sellers. In other words, find supply 10 times, but supply is never infinite. Even if that's a really aggressive seller, sooner or later, he's even going to say, well, heck, I can probably sell higher up. And it can happen in a heartbeat, instantly, for no reason. And there's no, it doesn't always happen on the 4th time or the 3rd time or the 1st time. It happens when it happens. And this is the problem with most traders trying to learn this. They think there's a mechanical answer to that. Well, on the 4th one, no. What you do is you integrate your tolerance for risk with the energy of the types of setups you're trading. And you stay focused on that and you don't overthink it. If you overthink trading, you'll never succeed at it because it will never be 100%. You will be wrong regularly. And the better you are at being wrong, the better you'll be as a trader. Being wrong is a skill. And one of the reasons I like to trade ledges, edges of the range, is because I'm pretty confident. I'm rarely wrong. And so I have to find places where it's just but obvious that I'm wrong. Otherwise, I won't listen to it. I mean, I'm self-aware enough to know exactly what I just told you. You know how long that took? That took about 25 years to get that self-aware as a trader. 25 years of trading, not 25 years old. So I picked that up probably around 40. And that was a huge revelation for me when I understood that about myself. Trading will teach you more about yourself than anything else you will ever do, I promise you. On that fast long, you were prepared to scale in all the way down to the low. Where was I wrong on a trade like that? On a very high volume break of the very low. That's where you're wrong on that. So it would have had to come through that low. And it did make a lower low, but it didn't do it on higher volume. The volume was diminishing down here. So let's say this spot right here looked like this over here. Then you're wrong. Okay, here, let me show you exactly the part I'm talking about. I'm going to draw a line around it. This is really a great question, and it's an important answer. Okay, this is, in either case, we were trading the same place all the times I was doing it, which was here. Look at the behavior down here. Wick, 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 wick. Wicks are indecision. Okay, here we had the same thing. We had some wicks, and then boom, you're wrong. Okay. And then here, again, let's say you got long here. You could scalp this long, but the wicks were telling you when it got to here, because they were on the other side, that, okay, That's as far as we're going. Remember, we broke down there before, and then boom, we broke down again. So this one, it's like you're wrong, you're wrong, you're wrong, you're wrong. And then you get a high volume reversal that looks just like any of the others, except one big difference. It took out the previous high. And when it did, the volume picked up. That was a spring right there. And then there was another spring. And then there was another spring. And then there was another. Those are Wyckofian springs. It's, if I spread these bars out, you'll see it pull back. It'll make a higher low. And then it'll take out the most recent high. That's what it does. So great question. Let me clear all this drawing off of here and get back to my pointer. Okay, let's see. Oh yes, absolutely, Todd. Yeah, I know you're kind of at that point in life and trading that you understand that. Yeah, it's a very humbling profession because it doesn't matter how good you are. You can, on any given day, you can get spanked badly. It doesn't matter how long you've done it. I mean, even with all my experience, every now and then I'll get cocky and I'll, drop 5 figures on a day. It hasn't happened in a while, but when it does, you're just like, God, I'm such an idiot. Now I'm human, depending on what size account I was doing it in, it may not be the end of the world. But just the fact that, you can still do that, but then that's telling me something's wrong. Either my rhythm was off or I hadn't slept or, generally there's a significant mistake in there somewhere, or I just wasn't competent to trade. And usually in my case now I'm not competent that day because of health or whatever, and lack of sleep. And it's really good to get good at understanding yourself that way. I mean, I know that I need to have a really clear spot where I'm wrong, where if I let it go farther than that, I'm not going to forgive myself in the morning. I mean, that's what I was just showing you. And it'll be really obvious. It would have taken that low out just on massive volume. And it didn't. Every time we took out the low, we formed a wick. And again, if your time frame's too slow, it won't look like that. It'll just be one big down bar. And if your time frame's too fast, you'll get too much noise. So that's why I like these. They're kind of dialed in. Oh no, you know what, Chris? If you're smart, it's actually usually harder. Very, very smart people tend to be overthinkers. So, if you're an overthinker, you probably are on the higher end of the IQ spectrum. Um, very true. And particularly people that have, engineering kind of minds, programmers and, tech people tend to be overthinkers. And people that are good traders tend to be people like surfers, like Surfer Dude, or video game guy is autistic. He's not completely at the, he's considered Asperger's, I think. But, you wouldn't meet that guy at a party and say, wow, I bet he's the best trader in the world. You'd wonder where he flips burgers. Literally, he can look in the eye and talk to you, but the guy's a genius. His brain's just off doing stuff that I barely understand. And so it's about finding the vocation that works for you and understanding how your health and, your personality makeup blend into it. People that are very indecisive aren't good traders, and people that are very opinionated aren't good traders unless they can learn to be wrong. And that's me. I'm opinionated, but I also have learned to be wrong. We're pushing down again here. We might get another opportunity. Let's watch for it. 95. Let's reset volume. We're in the old area that was getting bought. So I just hit the market long there just for fun with 5 micros. Since it's working, I'll take 5 more. See, so far we haven't made a lower low. Let's watch the volume. The lower low's down here and it's getting bought right on the spot it was before. And this volume is the same as that volume so far. So my bar is red for the moment, but I can see we're right in the spot I was playing before. So now if we overshoot a little bit down here, that'll be a good spot. And again, to be totally wrong here, this is going to have to take out the recent low, and that would make me pretty wrong, but that's just not likely to happen under these conditions. We're at the bottom of the range. We can protect a little bit of this right there. We'll take 5 of the 15 off. Now we got 10 left. Protect 5 more. Now it's going back up aggressively. Let's protect 10 of them. Now, boom, we got another $500 trade. I mean, if I spent too much time thinking about what the perfect setup was or running some silly analysis down here, I would have missed that. I took that purely on the visual you're seeing. Just look at this pattern. Why wouldn't you buy that? I mean, the chances that it's going to keep going down are just so low, and boom, we're out and profitable again. It just, again, just use the visual and look at the volume. All we could do, we got 120 ticks on 33. Okay. 166 takes on roughly the same, a little bit more is what got us up here. This one was 57K on 129 ticks. So the pullbacks are weaker. Not always going to be in exactly the same spots, but this holding above this is what set off that spring back up. The fact that it couldn't get here. See where it started getting bought? Here was where this had already turned. The buyers were front running it like what I do. That's what they were doing right there, and it turned out to work fine. It was the place to do it, but they were prepared to continue trading into it down here like I was. And so it just takes practice. There's really no magic formula or, magic sequence to do. All right, here we go again. We're down here again. Well, let's see. How about 90? Let's try 90 and 93 this time. 93 didn't even get hit. Let's try 95. Okay, 95 traded positively, and we can protect 4 ticks, 5 ticks, 6 ticks, and we took profit. I'm being a little more cautious now, and there's the big sweep up anyway, because I wanted to show you how you could protect it that tight, and then you're taking almost no risk because you're going to get a bounce. It might only be 5 or 6 ticks, but you're going to get one. So, but in general, you can catch runners when the market's moving this much. This is very unusual movement for ES, and it's doing that because it's so thin. Look at the liquidity here. It's really thin. So that's why we're moving around so much. And so we're basically trading ES like NQ is what we're doing. We're just playing the momentum. NQ is moving too much to trade it. I mean, even crunched NQ, look at this. This is 4-1 here. Look at how much that's moving around. I would not play over there just because where am I wrong over there is in the same spots, but being able to manage that much movement in NQ is much harder. So this is a better opportunity to play, more scale and take the bigger tick value in ES and MES. All right, we passed the bottom of the hour, so we're in the last period here, the last rotation. I'm going to sit back for a minute and just watch. Again, when you have good numbers in the bank, that's not a bad idea either. This is turning out to be a decent day. That 35, 31 before commissions, call it 26, 20, no, more than that, 28. Let's see, let me add them up. Yeah, 27.5. And, again, this is also very telling. Even though we're moving around a lot, we're really not leaving the range. The range has been more or less consistent here. We overshot a little bit there. We tested the edge of it here. It's tightening up. There is an apex forming here. And if you looked at this on a faster time frame, it would be even more so that way. See, that's 15 seconds. Here's 5. That doesn't tell you anything. That's too much noise. Here's 10. That's a little too directional, but if you're just looking for the direction, 10 seconds right now is telling you what it is. 15 tells you exactly where the inflection point is and that we're in the middle of a decent range. And if you go out to about 30, you'd see the basis of the range since we got the FOMC. Say it's, even though it's further back, that reaction has pretty much summarized into down here now. And we could go back farther. Again, you can play this game. I don't go back any more than 30. Here, even 45 seconds. The range gets so big, it doesn't matter anymore. Now the high of this is 23 and the low's 80. That's just too much real estate. So I tend to like to leave these around 15 to 30 on really volatile days. And at the moment, I'm running the wave volume on 15, so that's a good balance for those. Now you're skeptical of the low. Yeah, the problem right now is the time, and the internals have settled. Look at that. Where the advanced decline's pretty much settled around flat. If you look at the equities, it's the same kind of mixed behavior mixed picture we saw earlier. I don't think the ES low is going to get taken out, but it might. I wouldn't be doing anything over an NQ, but the first thing that has to happen for the ES to take out the low is to take out the bottom of value, which is anywhere significantly below 90. So, by that, I mean this 85 or lower. So that's got to happen before there's any chance of the low going. But right now, I'd be more inclined to be looking for longs at the bottom of value, like where it just was at 90 there. Let's reset the middle volume again and just watch where it's getting bought and sold. We're also getting closer to the close, and we're going to have the 10-minute wiggle in 7 minutes, and that's always a time when there's a burst of volatility. The market on close orders are coming in, and that's always 10 minutes before the top of the hour. So as you can see on my clock in the middle of my screen, it's 12:44 here. So that starts in about 5 minutes, 6 minutes, and I doubt that'll get us out of this range. This range looks very strong. Look at my LRCs. When the LRCs are almost horizontal, and on that time frame, that's 30 seconds. That's a large number of bars where we have not gone. This is the best fit of the data, and we're more or less holding the middle. Yes, we could take the low out. I think it will get bought if it does. Let's watch it. Here it comes. There's the low right there. That's 89, where I just put that mini order. Let me bring up my thing here so I can watch this better. Okay. Yeah, you can play along right there. Let's see what happens. The tick's dropping really hard. So that's 89. And I'm doing it with a mini just for fun, as opposed to some micros. And from there, I'd expect to see at least 85 lower. So there we go. We got long. Can we catch a quick scalp? Let's see. Oh, this is perfect. There's the high volume node. There's the low. Perfect. 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 Again, this is the kind of, if you're going to play, this is the level to do it. It's pushing down really hard. This is perfect going into this close. Okay. But don't do what I do unless you can manage risk like I do. Okay, I bought 5. And now I have 2 left and $500 of profit here. Now I have 1 left and I'm protecting $500 of profit. So yeah, that low went, and it was a golden opportunity to hit it really aggressively. Chris, now that doesn't mean you should do what I just did, but see the point? It got bought and they took out the low really aggressively. So they stopped everybody out and then they bought it. That's what aggressive funds like to do. Here, let me refresh this chart and you'll see what I mean. Come on. There we go. Okay, so yeah, see, we just took out the low. And then once again, the buyer said, okay, that's the spot we want to play. And boom, they did. But we haven't bounced very much. So again, if you didn't play that aggressively, it wouldn't have been profitable. You had to be really aggressive there. And think about that for a minute. You're trading with the most aggressive traders on the planet, in the futures market. You remember this thing, welcome to the hardest game in the world. I know you guys have seen that before. I'll bring it up one more time while we're watching the 10-minute wiggle in a couple of minutes. Here we go. Hardest game. There it is. Okay. This is courtesy of Trader Dante. Welcome to the hardest game in the world. Read that real quick. I mean, that's what it takes. This is brutal. People with faster computers, people with more money, people more unethical, people that will misinform you, your inner voice telling you what not to do, all this stuff. You learn to survive, and then you learn how aggressively you can play or not. This is posted in the pit. I'll put the link to it in the chat. I know most of you have already seen it, so. That there, and we'll put that there. All right, so we're back down here. I'm not going to do any more the rest of the session, I don't think. That was a real nice additional one we just did, and now I'm kind of happy to stay here. Whoops, didn't want to do that. I wanted to do that. Okay. Can't put this in here. Ooh, we're back at the low. Look at that. So there's our 10-minute wiggle pushing the low down. Tick's still pretty negative, minus 300. There are buyers down here, but they're not aggressive enough yet to hold the low. Let's watch the volume. Right on the 10-minute wiggle. It's perfect timing. This is probably a long. I really don't feel like trading anymore, but maybe I'll do one anyway. Let's see. Okay, there's 20 micros. Take profits fast on 10 of them. So that's working. We're long 81. It bounced all the way to 86, took some off. We'll do that again. Maybe we can get underneath it here. We may or may not get a runner. It could just close down here. There we go. All right. So now I've got 5 left. A couple $100 from doing that trade. We'll protect it as soon as we can here, if we can. May not get a chance, so let's use a target instead and just take profits. So maybe we'll take one more bite at this. No, it's gonna take me out that way. Yeah, come get me. Okay, big sweep down. Should we buy this again? Yes. Okay. Yes. Okay, here we go. Let's get flat. Boom, boom, boom. We are flat. All right, 10 minutes to go. I'm just gonna kind of let this play out. I'm gonna go make a fresh cup of coffee for my afternoon work. And I'm gonna close that little goodie. If you guys have any questions, I see a question. Do my volume candles change color to blue if one contract is long more than short at one end of 15 seconds? Okay, are you talking about the ones on the LRC view or on the Jigsaw view? Because they're different. The tool works differently. So the one on the bottom here or the one on the top? The Jigsaw one. Okay, on the Jigsaws, the way it works is it's coloring based on the volume of the bar. And then this line is weighting the direction with the volume. And the really thin line is the super trend indicator. So I'm running 2 different indicators here. One of them is just a swing of volume. That's this one. It's called JT swing charts. And I'm running it on those are the defaults, and it's showing the number of ticks and the volume. It automatically colors this bar based on how much volume on the last swing relative to the previous. So right now, the direction just changed down here in the lower right. That's the super trend, but the volume is still much bigger on the downside than on the upside. So the bar is still, the line is still red, and each individual bar is getting colored by its relative volume. So it can be inside of another bar and still be blue because the volume on that bar was on the buy side. That's what it's showing. And obviously the bars are going to change based on what your time frame is. This is 15 seconds. If I made it much further out than that, there would be most of the bars would be the same color. So for example, if we went to let's go to 2 minutes, and that ought to be different enough that you'll see. So this whole area down here will be red because on a 2-minute time frame, it's not really bouncing, and so that's why you want to go in pretty fast if you're using volume, because it can change very, very quickly. And that's the whole point. That's the opportunity in trading it, is taking advantage of that change. Okay, so all right, so those are 30-minute bars. I don't know how I got 30 minutes. I was trying to get 3 minutes. Hold on. I guess I put a 0 in. Yeah. Okay, we want a 3, not a 3-0. 3. Okay. That'll be a little easier to read. But again, you'll see it'll all be clumbered together and not very useful. That's why longer time frames for this type of data are not useful at all. Anything over a minute or so, it could be a change in conditions you're seeing, not any sort of, see how there's still blue ones here, but they're doing it based on the volume. So here's a good example right here. This one was heavier volume on the downside. Even though it made a lower low, the volume in this bar was on the buy side relative to this bar. That's what it's showing you. And their widths are roughly the same. The width is the amount of volume. The color is which side it was on. Was it trading on the bid or the ask? And if it's trading on the bid and price is going up, that's, people improving, sellers lifting the ask. Okay, let me put this back where I had it. That's one thing. It always makes me crazy having to reset everything if I don't do that as I'm talking. So, okay. But I hope I answered your question. You say it is changing with volume, but is that aggressive volume minus? No, 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 no. It's nothing like that. It is an algorithm exactly how it's running. You'd have to go read the Jigsaw blog. And sometimes Pete doesn't disclose exactly how the algorithm works, like the one that's painting this line. I know what it's doing. It's just weighting the direction on the volume. And that's why I've got one just showing me the direction. But exactly what the formula is that's using, I don't know. And it doesn't really matter because I can see the tool and I know what the tool does. And the tool helps me make decisions or avoid making bad decisions. And that's all I use it for. Hopefully that makes sense. But don't think to order flow. For example, this is a better tool for your question you're asking me right here, this bar right here. That's the trade bar. If that's red, market orders are hitting the bid. If that's green, market orders are hitting the ask. So that's answering your question right there. See, but look at that big burst of market orders on the buy side. So the sellers lifted the ask and we shot up. The Jigsaw tools are very specific about one thing that they show you like that. And then how you assemble them into whatever way you trade is up to you. I look at the wave volume simply to see where I want to play and at the moment who's in control. And I don't ask any more about why that's colored the way it is because it doesn't matter. It's just telling me that I have an inflection point and then I'm watching the inflection point here and I can see literally what's happening. Hopefully that answers your question. Give me a follow-up if it doesn't, Bob. I think I understand what you're asking, and I think I answered it, but I'm not sure. All right, we have 5 more minutes anyway, so we still have time for that. And yes, I did. Okay, good. Yep, good question. And don't get too, the thing about Lee and I, we're a good balance. Lee is very numbers oriented in order flow. He wants to look at what's happening right on the bid and the ask and, really get in there. And particularly on ES, that can be very useful when it's not moving around much and it's trading orderly in market profile. And it does that most of the time. There's good statistics around that. Price action trading, particularly price action scalping, is much more visual patterns. What's the bottom of the range? And when we get down there, what happens? And the first thing you learn is that it'll overshoot any range. So be prepared to get a stops run that you're going to buy into if it's at the low, or a stops run at the high that you're going to sell into. Because if you're not prepared for that, when it happens, you'll get stopped out at exactly the wrong time. And so again, if you're going to trade ledges like I do, and you're going to fade ledges, it helps to be a bit of a contrarian type of personality. That will help you do that as long as you can learn to manage risk. On the other hand, if you're a joiner, if you're a person that likes to go with the crowd and you don't like to cause trouble and you don't like to be one that disagrees with other people, well, then you probably want to think more directionally in the market. So I would look for inflection points and then always ask myself that next question: who's in control here? And if ledges were breaking down to the downside and I had that personality, I'd be looking to go short with those ledge breaks. And like Lee does, even just trade toward the ledge break for a few ticks because it's likely to happen, and then color that with things like, unfinished business or a poor low or any of those other things. Boy, we're down here again. We're going to end up closing right here near the lows, which is interesting. It's not a large move at all. Here's the statistics. NQ is down about 90 points. ES is down around 17 points. The ranges are very small today, 342 for NQ. Well, not that small, 80 for ES, but most of that is obviously since we got the announcement when obviously it was price discovery. So, but the net is we're not even down 0.5%. Remember, RTY was down over 1% earlier. So let's take a look at that. Actually, that's the last thing we'll do. Let's look at all 4 indexes. Interesting. So we're just below value in RTY. We're just below, this is Globex value. So we're just below value in YM. We're pushing down right on SD2 in ES and NQ. Actually, we did in YM also. So all 3 of the larger ones did. That has to be tech selling off. There's no other way that could happen. So and sure enough, it's tech. See, Microsoft, NVIDIA, Oracle, Palo Alto Networks, Netflix. So that's what started that. Once whatever something was said at the press conference that tech didn't like except Apple, which could be other stuff. So anyway, again, the reaction to the reaction tomorrow, and then Friday, we should get some sense of value by the time we finish quad witching day, but the day itself could be very interesting in both directions. All right. Yes, it was fun, Chris. Um, let's see. Is it possible to replicate Sierra chart LRCs with Jigsaw? Yes, I haven't done that much with their LRCs, but I'll tell you what, real quickly, we could try it. I know they're there. I just haven't played with them at all. So let's do a quick ES chart and hang on. Okay. And let me wait for it to come up on whatever monitor it plans to come up on. And the bell just rang. Okay. I don't know where that went. I opened a new chart and it disappeared. Hang on. There's too much going on my screen and Zoom is interfering. Error window. Where is that chart? It should be another ES one. It's not that one. Oh, I don't know. All right. Well, let me see if I can just throw it on one of mine real quickly. I don't want to change my setup again too much. It's too hard to put stuff back, but let me just try it. So you go to indicators and they do have regression here, but again, I haven't even looked at it. I know it's got linear regression, intercept, and a linear regression FCST. I'm not sure what that is. The linear regression slope would show you the line that would be in the middle of my plot. And there's also apparently some new stuff coming out in the new release, which is out right now. I think if it's not out now, it's out in the next couple of days. So I don't see a linear regression channel per se. Let's see. But I know he plans to do one because I've been talking about it for years and showing it on my other platforms, and I know he planned to put one in there, but I guess he didn't yet, or it's part of that regression slope. Maybe that can plot it inside that indicator. That's where it would be. I'll try to have a look at it for you. I'm not sure though. Yeah, if you might want to see or ask, you could open a ticket with them and ask them. They take a picture of mine and say, "Is there any way to do that?" I'm sure there's some way to do it. All right, I will see you guys later. Good session. It was fun. Have a good rest of your evening. We'll see you for TRG Open tomorrow morning.